this fundamental pillar of being very attractive in terms of value for money. How does a discounter look at a price gap versus a mainstream retailer?
Well, you firstly would say the bigger the price gap, the more advantage for the discounter, full stop. But that's self-explanatory. The discounters would be looking at that not in a sense of, oh, we need to have that percentage price gap, and they just apply that across all the categories, across all the products. It's rather more individual product by individual product. And to give you an example, there are commodities like milk, like sugar and flour, where some of the established players, the big four players in the UK, probably have a price gap of only 1 or 2%, sometimes zero. But then if you apply that across the assortment, you'll find products where there is sometimes a price gap of 20 or 25%. The discounters will really make sure that no one undercuts them in the price. It's clear that on some very fast selling lines, it hurts both types of retailers, the big retailers, the big four retailers, as well as the discounters, as the margins are usually much thinner on those products. But the way the discounters approach that is obviously they're trying to take a look and see where can I afford myself to sell a product still in profitability, yeah, and still with a small margin maybe. They would probably not want to go with a margin higher than 50% on any product. That might be an opposite case at some of the big four supermarkets, just simply because they're saying we want to be attractive in our pricing, and we want to offer the customers real value for money. So if some products are really on such high margin, then they will be living with, God knows, 40, 30% or something like that, but not trying to improve that to 80 or 100%.
How have, and you have direct experience for a number of years in the UK market, how has that price gap evolved over the years, and in particular during your leadership of Lidl's UK business?
Well, that price gap goes up and goes down, but I think as a trend, it's fair to say that the price gap is narrowed. If you were to take it back 20 or maybe 15 years, then the price gap was around about 20 to 25% on an average basket probably. These days, I would argue it's only around about maybe 10 to 12% on an average basket. And again, that's not on every product. That's a weighted average basket of a weekly shopping trip. But you can see the pressure has been increasing from the big four. I think they've realized that the price gap was for too long allowed to be at that level. For maybe too long, some of the established players have been living with too high dividends and too high earnings. And that's just meant that the long-term perspective was closing and has caused them quite some pain nowadays. I've seen some of the retailers really fighting back on that one with private label, but also price investments, and that meant that the price gaps narrowed. Saying that, I feel that there is not much more room to be made from a big four point of view, i.e. Reducing that margin further. If they want to stick to, let's say, their usual shareholder value for money proposition. They could, I believe, they could narrow that margin down to zero. It would not be an issue. At zero, I feel they would be loss making. But let's say if they were to bring that down to maybe 5 or 8%, which would put them in a very striking distance, then maybe the profitability, i.e. the bottom line net result for some of the established players would not be 3.5% anymore, but rather 1 or 1.5% if anything.